One of the most popular questions that I get are, what do I actually need to qualify for a mortgage? And a lot of people think it's way more complicated than it really is. They assume that they won't qualify at all. So today I'm going to break it down into four basic things that lenders look at when you're applying for a mortgage in plain English. So let's start off with age. A lot of people come to me and say, I think I might be too young, or maybe even I've I've crossed that hill. I'm a little bit too old to be thinking about a mortgage. And the reality is this. There's never the right age. It's just whatever works for you. So as long as you're over 18, heck yeah, you should be considering a house. It's going to be your fastest path to wealth. The younger you buy, the better chance you have of growing equity in a purchase. Now, if you're a little bit older, you don't want to be spending money on rent when you could be investing in some real estate and helping build your portfolio. So really, as long as you're over 18 years of age, it doesn't matter. You don't need to be a certain age before you can qualify. Whether you're a first-time family and you're young, you're in your 30s, or maybe you've already had a couple kids and they're out of high school and now you're thinking of buying. I work with borrowers through the whole spectrum of ages. Now, as far as income goes, the banks are going to want to make sure that you have income, because guess what? That's how you pay your mortgage, through income. So we're going to need to verify that you have at least 2 years historical of work. Now, it doesn't mean you have to be at the same job for the last 2 years. It's just going to mean that they're going to want to see 2 years job history. Now, there are some caveats to that. For example, if you're a recent graduate and you just finished schooling, or even high school, to be honest with you. I did close a loan for a gal who graduated high school. She had worked at the restaurant for 1 year and we helped her out. So as long as we can verify that you have something prior to either a 2 year history of working, or you have some schooling and they'll ask for your transcripts from your school, and then 1 year of work history, something to show. That doesn't mean you have to have 1 year. I'm just saying you have to have something prior to that 2 year history. If it was schooling, then that's what we would justify that with. Okay. So what matters the most is that you have some consistency. They're going to want to see that historical of 2 years and the ability to document it. So typically, to document 2 year history, we're going to look to see your W-2s for the last 2 years, or if it's schooling, then they're going to want to look at those tax transcripts. Now, the next thing we're going to want to look at is your credit score. Do you have good credit? Now, I have done loans for folks that don't have the greatest credit. It happens. Sometimes we go through life and things happen. We have late payments or something. Maybe we co-signed with somebody that did us dirty, but they're going to look at your credit score. So what we're going to want to see is typically something a 600 or higher. Now, can you go below? Yes, I've got loans that go down to 580 or lower, but they're going to need some compensating factors that get a little tricky. So if you can at least get to a 600, you're in smooth sailing territory. We can get you a loan done. Now, obviously, the higher your credit score, the better interest rate that you're going to get on this loan, and probably the easier we're going to have a time with underwriting as well. Having a good credit score tells the bank that you can manage credit. And so it's really an important piece to the puzzle when it comes to getting pre-approved to buy for a house. So the last thing that we're going to look at is, do you have any assets? Do you have savings? Because we're going to have to pay for a down payment for this house, more than likely, unless you're a VA. And there's probably going to be some closing costs. So the bank is going to want to see that you have something in the bank to cover those two expenses. Now, is it necessary 100% of the time? No. Again, there's workarounds for all of this. VA loans do not require a down payment. So heck yeah. And USDA loans as well. So definitely done my fair share of these loans where we don't need a down payment. but those loans do require closing costs. Now, closing costs are something that you can have your agent negotiate for. And sometimes we've seen closing costs paid for entirely, and sometimes we've seen portions of those closing costs covered. So, those are some things that you can negotiate at the closing table. So, let's recap. We've got work history or schooling history. We've got credit. We've got hopefully a good credit score. And then we're looking at assets for your down payment or closing costs. Those are going to be the three biggest drivers of getting your pre-approval for purchasing a home. Now, when a lender reviews your application, they're really asking one question, which is, can you reasonably pay this back? That's my responsibility. And so age is not going to be a driver of that. And perfect credit is not going to be necessarily a driver of that. But we're going to look at a mix of all of those criteria together. So if you're not sure where you stand or you've been told no in the past, it does not hurt to call me to ask those questions. Drop a comment, hit me up, call me, send me a message. Glad to sit with you and get you prepared for purchasing this upcoming year.